Welcome to your ultimate guide to investing in 2025. Whether you're just starting out or looking to sharpen your financial skills, you're in the right place. The world of investing can seem overwhelming, but with the right knowledge, anyone can take control of their financial future. Forget the myth that investing is just for the wealthy or financial experts. Anyone can start, even with just $100. You don't need a finance degree or a huge bank account to begin. In fact, the most important step is simply getting started, no matter how small your first investment may be. The real secret isn't a big bank account, it's time. The earlier you start, the more your money can grow. Thanks to the power of compounding, even small amounts can turn into something significant over the years. Think of investing as planting a tree. The sooner you plant, the bigger it grows. Investing is simply making your money work for you, instead of letting it lose value in a savings account. While saving is important, inflation can slowly eat away at your money's purchasing power. Investing helps you stay ahead and build real wealth over time. You buy assets, like stocks, real estate, or gold, that can increase in value. Each asset type has its own risks and rewards, but all share the potential to grow your money beyond what a regular savings account can offer. This guide will break down 5 popular investment options, using a real-world experiment. $100 invested in each 4 years ago. We'll show you exactly how each investment performed, so you can see the real results for yourself. We'll compare them on how easy they are to learn, passive income potential, tax advantages, risk, and results. You'll discover which options might fit your lifestyle, your goals, and your comfort with risk. Remember, all investing involves risk, and this is for educational purposes only. It's important to do your own research and consider speaking with a financial advisor before making any decisions. By understanding your options, you can build a strategy that fits your goals and risk comfort. Everyone's financial journey is unique, and the best plan is one that works for you and your future. Let's take that first step toward your financial future, starting now. No matter where you are today, your journey to financial freedom can begin with a single decision. Let's get started together. First up, let's talk about individual stocks. The classic way many people start their investing journey. There's a certain excitement in choosing your own companies, tracking their progress, and feeling directly connected to the businesses you believe in. When you buy a stock, you're not just making a bet. You're actually owning a small piece of a real company, like Apple, Microsoft, or any business you admire. It's a tangible connection to the world's biggest brands. The main goal? Find a company you believe will grow over time. If you choose wisely, your investment can grow right alongside the company's success, sometimes dramatically increasing in value. The upside is clear. If you pick a winner, the returns can be huge. Some investors have made fortunes by spotting the next big thing early. But here's the catch. The learning curve is steep. It's not enough to just pick companies you like or recognize. You need to dig into financial statements, understand business models, and keep up with industry trends. Research is key, and it can be time-consuming. Thankfully, many trading apps now offer demo accounts. These let you practice buying and selling stocks with virtual money, so you can build confidence and test your strategies before risking your hard-earned cash. Stocks can reward you in 2 ways, through capital gains when the price goes up, and sometimes through dividends, regular payments companies make to shareholders. These can add up over time, providing a nice bonus on top of any price appreciation. And don't forget about tax advantages. If you invest through accounts like a Roth IRA in the US or a stocks and shares ISA in the UK, your gains and dividends can grow tax-free, making your money work even harder for you. But the risks are real and high. If the company you choose runs into trouble, the stock price can plummet. In the worst case, you could lose your entire investment. The stock market can be unpredictable, and even the best companies can face setbacks. That's why diversification is so important. Instead of putting all your money into one stock, spreading your investments across several companies can help protect you from big losses if one company stumbles. For example, in our experiment, $100 invested in Samsung dropped to just $67.76 after 4 years, a painful 32% loss. Even big, well-known companies aren't immune to downturns. Even if you receive dividends, the overall returns from picking individual stocks can be unpredictable. Market swings, company news, and global events can all impact your investment in ways you can't always foresee. The lesson? Stock picking can be thrilling, especially for beginners eager to test their skills, but it's also risky. and the emotional roller coaster of market ups and downs isn't for everyone. So before you dive in, ask yourself, is the thrill of the pick really worth the risk? Make sure you're prepared, informed, and ready for the ride. Next, real estate investment trusts, REITs. REITs let you invest in real estate without owning property or dealing with tenants. You buy shares in a company that owns income-producing properties, offices, apartments, malls, learning curve moderate. Know what types of properties the REIT holds. REITs are required to pay out most of their income as dividends, making them great for passive income. Hold them in tax-advantaged accounts for tax-free growth. Risk is medium, diversified across properties but still tied to real estate markets. In our experiment, $100 in a REIT became $110.52 thanks to strong dividends. REITs offer steady income and moderate growth without the landlord headaches. Now the Wild West cryptocurrency. Bitcoin and Ethereum are digital assets, independent of banks and governments. Crypto is part investment, part speculation, betting on future adoption. The learning curve is moderate. You'll need to understand wallets, security, and avoid scams. Crypto doesn't pay dividends, but you can earn through staking or lending, both high risk. Tax efficiency is poor. Most transactions are taxable. Risk is extremely high. Prices can swing wildly and losses can be total. In our experiment, $100 in Bitcoin exploded to $652.24, a 552% gain. But remember, crypto's volatility is legendary. Only invest what you can afford to lose. Crypto can deliver huge rewards, but comes with massive risk. Approach with caution. Let's talk gold, the classic safe haven. Gold has preserved wealth for centuries, especially during uncertainty. It's easy to invest buy physical gold or more simply, a gold ETF. Gold doesn't generate income, no dividends or interest. Its value is in stability and wealth preservation, not rapid growth. Risk is medium, less volatile than stocks or crypto, but returns may lag over time. In our experiment, $100 in a gold ETF grew to $140.10, a 40% gain. Gold won't make you rich overnight, but it can protect your wealth. It's best used as a stabilizer in your portfolio. Think of gold as insurance, not a growth engine. Now let's talk about index funds, one of the most powerful tools available to everyday investors. For beginners, index funds are arguably the best choice. They're simple, accessible, and don't require you to be an expert in picking individual stocks. Index funds track an entire market, like the S&P 500, which means your money is automatically spread across hundreds of leading companies. This gives you instant diversification, reducing your risk compared to betting on just a few stocks. The learning curve is refreshingly low. With a single purchase, you own a slice of hundreds of businesses, from tech giants to consumer staples, all in one fund. It's a passive set-it-and-forget-it strategy. You don't need to constantly monitor the market or stress over daily price swings. Index funds offer moderate passive income through dividends, and historically they've delivered strong long-term growth. Over time, your investment can benefit from both regular payouts and the overall rise of the market. Tax advantages are excellent when you invest through accounts like a Roth IRA where your gains can grow tax-free, or if you're in the UK, an ISA. These accounts help you keep more of your returns, making your money work even harder for you. Plus, the risk is low because your investment is diversified across many companies and industries. So, if one company stumbles, it barely makes a dent in your overall portfolio. That's the beauty of spreading your risk. In our experiment, $100 invested in an S&P 500 index fund grew to $179.57, an impressive 80% return over time. This shows the power of patience and compounding. Index funds combine growth, income, and safety, making them an ideal choice for most investors, whether you're just starting out or building long-term wealth. That's why index funds are often considered the foundation of a smart, resilient investment portfolio. Let's compare the results of our $100 experiment. Bitcoin was the runaway winner, growing to $652.24. The S&P 500 index fund came next at $179.57. Gold delivered steady growth, reaching $140.10. The REIT, boosted by dividends, ended at $110.52. The individual stock, Samsung, lost value, down to $67.76. The lesson? High returns come with high risk, as seen with crypto. Index funds, gold, and REITs offered a balance of growth, income, and stability. There's no perfect investment. Your best choice depends on your goals and risk tolerance. Diversification is key to balancing risk and reward. Don't chase the top performer, diversify. Diversification means spreading your money across different assets to reduce risk. When one investment struggles, others can offset the loss. A solid beginner portfolio core in an index fund, with smaller amounts in REITs, gold, and maybe a little crypto. This approach smooths out returns and helps you stay invested for the long term. The goal isn't to hit home runs but to build wealth steadily. Diversification protects you from big losses and market surprises. It's the smartest way to invest for the future. The final and most powerful ingredient in investing is time. Compound growth turns small, regular investments into real wealth, but only if you start early. Don't wait for the perfect moment or a bigger paycheck. Start now, even with $100. Index funds are a simple, proven way to begin. Diversification and time are your greatest allies. Open a brokerage account, automate your contributions, and let your money grow. The best time to invest was yesterday. The second best is today. Even small amounts invested now are more powerful than larger amounts later. Use time to your advantage and watch your financial future transform. Your journey to financial freedom starts with a single step. Take it today. If you found this guide helpful, comment below with your thoughts, share it with friends, and don't forget to subscribe and hit the bell so you never miss an update.